Second episode of the smart money concept trading model. Okay, so now uh, in today's teaching, I'm going to be looking at the topic on what to look for in price action, or rather, what to look for in price. Okay, so we are going to be our major focus is going to be what smart money traders look for in price action. Okay, so if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell so you get notified whenever we upload our weekly content. Okay, our live trade experience series will continue as from tomorrow, Tuesday. Okay, because we normally start trading from a Tuesday. Okay, so now what to look for in price. Our main focus in price action as smart money traders. Okay, so let's get down to it. Now the first major uh, level we look at in price as smart money traders are the old highs. Okay, this is because resting above these old highs are buy side liquidity. Resting above old highs are liquidity in form of stop loss used by traders to protect their positions and accounts. Retail mindset traders are going to place their buy stops above old highs with the intentions of trading a breakout. Then smart money are going to use those buy stops as counterparts for going short and offloading their long positions, because the buy stops are going to act as buy orders which smart money are going to settle. Okay, so one of the major uh, price levels, or one of the major concepts of smart money traders are, one of their main focus in price action are old highs. Okay, because above this old high is probably liquidity, buy side liquidity resting above these old highs. Okay, so that's one of the major focus of smart money traders. Then what's the next, uh what to focus on, the next in line is old lows. Okay, sell side liquidity. Resting below old lows are liquidity in form of stop loss used by traders to protect their positions and accounts. Okay, retail mindset traders are going to place their sell stops below old lows with the intention of trading a breakout. Then smart money are going to use those sell stops as counterparts for going long and offloading their short positions, because the sell stops are going to act as sell orders which smart money is going to buy for. Okay, so now uh, smart money, these are the various concepts they look at in price action. Okay, these are what um, they pay attention to in price. Okay, the first thing we have here are the old highs. The reason for that is because buy side liquidity is going to be resting above the old highs, and the algorithm is going to seek for those liquidities. Okay, now the next in line is the old lows. Okay, it might be a single low, or multiple lows. Okay, just like we can see here, price is going to seek for the liquidity resting below these old lows. Okay, so when we have a situation of an old high in this example, two things are actually resting above these old highs. Okay, we have those that we are lucky enough to go short from here, then they'll probably have their stop loss right there. Okay, then we have those that see this as, following this trend, and they are going to be like, okay, if this breaks as a, they are going to want to trade this as a breakout trader. Okay, so they are going to have their buy stops resting above this old high. So as you can see, price eventually took out the stop loss of the ones that went short, then tapped in the stop loss of, or the buy stops, activated the buy stops order of the retail traders that are looking to trade a breakout, right? And went the other direction. So these guys are actually in losses right now. and probably their stop loss is going to be for the buy stop traders, their stop loss is going to be below this old low or somewhere around this. Okay, so that is one of the main focus of smart money in price actions. Same can be said for the old lows. Okay, we're going to have some series of stop loss resting below here, and retail traders are going to have their set stops hoping to go short. Okay, and as you can see, price went down, tapped in the liquidity resting below here and took off the other direction. So what actually happened here is this is smart money buying the stop loss. Okay, buying from the willing sellers that are resting below here. Okay, so this is smart money accumulating their order and taking the market in the other direction. So how this normally works is that for smart money to go short, they have to have some series of willing buyers to to buy, to sell to them. Okay, to buy from rather. Okay, so now for there to go short, the one place that uh, willing buyers are going to be residing is above the old highs. Okay, actually above the old highs. Then if smart money one is looking to go long, okay, they are going to drive price to some to run some liquidity below an old low. Okay, so this is the level at which willing sellers are going to be residing. Okay, and smart money is actually going to buy from them, okay, to pair up their orders. So that is just one way the price is being delivered efficiently in the marketplace. Okay, so now for price to move to be to be delivered efficiently, there has to always be buying and selling. Okay, so that is just as important as how important the old highs and old lows are. Okay, so now we understand the concept of old highs and old lows and their importance. So let's move on. Now the next level of focus as a smart money trader are clean highs. Okay, this is because buy stops of liquidity are going to be resting above that. Now when some level of old highs are too clean, equal or relatively equal, the algorithm is going to seek out those highs for liquidity. Okay, so now when we have equal highs in this example, when we have relatively equal highs or equal highs, uh, the algorithm is definitely going to seek for the liquidity resting above those highs, because retail mindset traders are going to see this as double top or whatever pattern, and they're going to have their stop loss and buy stops above that. Okay, so the algorithm does not like leaving this kind of clean highs, okay, relatively clean highs and equal highs. Okay, the algorithm does not like leaving such uh, levels too clean. Okay, so the algorithm is going to seek out the liquidities resting above those old highs. Okay, so now our next level of focus is going to be on clean lows. Okay, whenever we see clean lows or relatively equal lows, in this case we have a relatively equal lows, we should expect the algorithm to seek for liquidity resting below those old lows. Okay, so we have these clean highs, relatively equal highs right here. So these highs are way too clean. Okay, so the algorithm is going to reprice to those levels and seek for liquidity resting below those old lows. Okay, those clean lows. So our primary focus, like we have made mention so far, are as smart money traders. Our focus are old highs for buy side liquidity, old lows for sell side liquidity, clean relatively equal highs or two clean highs for run on liquidity. The algorithm is going to seek those highs, or okay, we're going to seek those equal highs or relatively equal highs or clean highs rather. Okay, they're going to seek liquidity resting above them. Okay, and relatively equal lows. Okay, the algorithm is going to seek for liquidity resting below these old lows. Okay, some levels are of old lows are too clean, equal or relatively equal. The algorithm is going to seek out those liquidities, those lows for liquidity. Okay, so that is one of focus as smart money traders. Okay, so when we pull up our chart, these are some areas of focus are some of the levels that our attention should be drawn to. Okay, that is just the main purpose of this of this video is to show us the levels that as smart money traders our attention should be mainly focused on. Okay, should be drawn to what should attract our attention easily. So that is why we name this what to focus on. Okay, as smart money traders in price actions. Okay, so the levels we focus on as smart money traders in price action. Okay, starting from old highs. Okay, we focus on old highs because resting above these old highs are buy side liquidity. We focus on old lows, resting below these old lows are sell side liquidity. Then when we have some level of clean highs, some levels of relatively equal highs or some clean high, the algorithm is going to reprice, it's going to seek liquidity that is resting above those old highs. Then when we have some level of old lows, we should expect some run on it because the algorithm is going to seek for liquidity resting below those old lows. Then the next level of focus our next level of focus as smart money traders in price actions are sharp runs in price, which is referred to as liquidity voids. Okay, now when sharp run in price occurs, this is referred to as market inefficiency. Okay, meaning only one side of price was offered. In this example, this is buy side inefficiency because only sell side was being offered with little to no buying. The algorithm is going to seek for this inefficiency and offer the buy side of it to rebalance price. Okay, so now I want you to the exercise right now. I want you to go into your chart and identify when we are such areas that have these sharp runs. Okay, that have these sharp runs. Okay, because there's going to be probably time the algorithm is going to seek to rebalance it. As we can see here, this is a sharp run, this is liquidity void, this was just buy side inefficiency, this was just the market bid offered only on the sell side. Okay, so there was no much of buying in this area of price action. Okay, there was just selling. Okay, the market was just selling, and which ought not to be so. Okay, because the market is more like buying and selling, buying and selling. Okay, but the algorithm repriced so fast that the only sell side was offered right here, so creating some kind of liquidity void. Okay, so now the algorithm in some time in the future is going to seek to reprice this level and create a buy side aspect of it. Okay, so as we can see, this is price rebalancing this and offering the buy side that was uh, not efficiently traded right here. Okay, so when we see sharp runs in price, our attention should be immediately drawn to it. Okay, so now the swing high, our next level of focus is the swing high, which is the three candle pattern, the up close candle for a bearish expansion. Okay, for our swing high, our attention should be on the up close candle and on the formation of it. Okay, so in this case we have this. Okay, so now before the 2022 mentorship, our definition of order block, or rather how we used to trade order block, is mainly was mainly the last up close candle. Okay, prior to the down move. Okay, so this was how we trade. So this before 2022 mentorship, this would have been my order block. Okay, but I guess ICT it add some new how am I going to put it, they upgraded the concept and was like the set of up close candle before the down move. Okay, so this would have been our up close candle, this would have been my order block before 2022 mentorship. Okay, so for swing high our focus is the up close candle because that would be your order block. Okay, so the last up close candle before the down move. So as you can see, price traded into it and dropped off. Okay, for now for our swing low, your attention will be on the down close candle, so this will be your bearish order block. Okay, and at the same time you can see we have this imbalance and the last down candle before the up move. So this before 2022 my internship actually came out, this would have been my bearish order block. Not, I would not have look at these two candles. This my attention would have been drawn to only this. Okay, so but now I know this I'm actually now looking at these two candles as my bearish order block. Okay, so but yeah, for the swing low pattern, this will definitely be your order block. Okay, this will be your order block for a swing low. Okay, so now what we have covered so far, this episode is actually going to be short and straight to the point. Okay, so the main purpose of this episode is to show us the levels that are smart money that our attention should be drawn to whenever we pull up price. Okay, and the next episode is actually going to talk about the type of traders. And before 2022 model came out, before 2022 mentorship, we used to trade the market. Okay, there was no intraday, there was nothing like intraday trading and before 2022 mentorship. Okay, so I think ICT actually introduced it in the 2022 mentorship. Okay, so before now we don't used to do trade intraday day trading. Okay, it was more like day trading, swing trading, position trading, and the rest, short term trading, I think. Okay, so the next episode is going to actually cover those types of traders and their time frame. So the takeaway from this lesson is that these are the particular levels in price action that as smart money traders we need to take note of. Okay, these are what your attention uh, should be drawn to. Okay, now these are just concepts on their own. They have to go along with other factors like your bias and the rest. Okay, so this all depends on the bias you are looking at it you are looking at. Okay, so of course these are just random examples, and we haven't come to the part of incorporating it in trading. Okay, I'm just showing the general side of it. We can just explain it in general. Okay, there are going to be time we're going to focus on this. We're going to focus on the application on live charts and the rest. Okay, so now our attentions are, like we mentioned earlier, should be focused on old highs. Okay, the importance of old highs is that we have buy side liquidity resting above it. Then the importance of old lows is that we have sell side liquidity resting below it. Okay, so I want you to mark up your charts, and every time you will see that I want you to mark up your chart right now on every time some level of liquidity is being taken out. Okay, so I want you to mark out old highs. Take note of old highs that have their liquidity, that have some run on it. Okay, in this example we have this old high and this run on buy side liquidity. Okay, so by training your eyes to be able to see this, okay, and like this is a run on sell side liquidity before the price drop down, sorry, buy side liquidity, then run on sell side liquidity. So what I want you to actually train your eyes, your eyes, is to be able to identify this level, because they are very very important as smart money traders. You should be able to notice the clean highs, the levels that are too clean, the levels that are too, you know the lows that are way too clean, relatively equals, and the rest. Okay, because price is actually going to, the average team is going to seek for liquidity, and you should be able to identify liquidity voids. Okay, sharp runs, market inefficiency. Okay, market inefficiency, you should be able to train your eyes to to identify this. Okay, then for our up close candle, for our swing high, this will be our order block. Okay, this is a liquidity void. Also we have the fair value gap right here. Okay, so you should train your eyes, you should train your mind rather, to be able to identify all these. Okay, so now the next episode is going to come up briefly, and I hope we have found this helpful and quite insightful. Okay, please, if this is your first time, please subscribe to this channel, turn on the notification bell, because the smart money trading model is kind of, the concept is broad, and it's going to be a little bit different from the 2022 mentorship. Okay, and the thing is, the idea is just doing teaching us this, not for you to put aside what you have learned so far from 2022. Okay, this is more like you know picking what works for you best. Okay, we have series of video about on the 2022 mentorship. Okay, so this is more like advanced than the 2022 mentorship. So if this one, if fits your style of trading, if you feel like you should go with this model, it's alright. If you feel you should go with the 2022 model, it's quite alright as well. Okay, I'm not forcing you to so the idea is not to leave one for the other. Okay, the idea is not to drop one for the other. but to see if we can pick one or two ideas from here and probably add it to the 2022 mentorship. Okay, that's actually my goal. I'm thinking of blending this with the 2022 model, and let's see how it goes. Okay, so there are more episodes that are going to be coming your way shortly, and this is just one to to show us some levels of some level of focus in price. Okay, so I hope we have found this helpful, and please do well to subscribe, and our telegram channel is always in the description box. Okay, so if you want to join our official telegram group, whereby I share my personal analysis, and we interact as a community. You are free to join. The link is in the description box. Okay, so see you guys in the next episode, and do have a great day and great trading week.